Based on the historical data and forecast, Bitcoin shows a generally upward trend, with recent volatility. The RSI indicates that the asset has been in oversold territory, below 40, several times in the past 2 weeks, suggesting potential buying opportunities. The Bollinger Bands have been widening, indicating increased volatility and potential for price swings. Considering the forecast for the next week predicts a consistent upward movement, with prices reaching $123,000, a long-term position is warranted. Therefore, I recommend entering a long position at $118,500. Given the volatility, a stop-loss order should be placed at $116,000 to protect against unexpected downturns. The initial target price should be set at $121,000, aligning with the upper Bollinger Band and a reasonable profit margin. If the price continues to rise, a second target price of $123,000 can be considered, based on the forecast data. This strategy combines RSI signals, Bollinger Band analysis, and future price predictions to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum shows a strong upward trend. The price has consistently broken through resistance levels, and the forecast for the next week projects continued gains. The RSI has fluctuated, but recently remained above 50, indicating bullish momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. Considering these factors, I propose a long position strategy. We will enter a long position at $4,200. The stop loss will be set at $4,150, just below the upper Bollinger Band, to protect against a potential pullback. The initial target price will be $4,300, aligning with the forecast for August 13, 2025. To maximize potential returns, we will implement a dynamic target price strategy. If the price reaches $4,300, we will move the stop loss to the entry price of $4,200, effectively locking in profits. Furthermore, if the price continues to rise, we will adjust the target price to $4,410, based on the forecast for August 15, 2025. This strategy combines RSI, Bollinger Bands, and forecast data to capitalize on the prevailing bullish trend while mitigating risk through strategic stop-loss adjustments. The final target price will be $4,570, based on the forecast for August 17, 2025. Based on the historical data and forecast, XRP demonstrates a recent downtrend followed by a potential upward reversal. The RSI consistently dipped below 50, reaching a low of 41.7, indicating oversold conditions. The forecast prices suggest a continued upward trajectory, with prices expected to reach $3.37. Considering the support price of $3.12 and a recent bounce, a long position appears favorable. We will implement a strategy combining RSI, Bollinger Bands, and support/resistance levels. Our strategy involves entering a long position at $3.12, coinciding with the support level and a potential RSI oversold bounce. A stop-loss order will be placed at $2.96, just below the recent low, to mitigate potential losses. The initial target price will be $3.32, aligning with the recent resistance level and the forecast price. If the price reaches $3.32, we will move the stop-loss to the entry price of $3.12 to secure profits and protect against a potential reversal. Furthermore, if the price continues to rise, we will set a second target price at $3.37, based on the forecast data. This combined approach leverages multiple indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, BNB exhibits a generally upward trend, although with some volatility. The RSI consistently fluctuating around the 50 to 70 range suggests that the asset is neither strongly overbought nor oversold. The Bollinger Bands indicate periods of increased volatility, with the price occasionally touching the upper or lower bands. Given the recent upward movement and the forecast predicting prices above $800, I recommend a long position strategy. Specifically, enter a long position at $801, placing a stop-loss order at $786, which aligns with the established support level. A conservative target price would be $814, based on the forecast for August 17, 2025. To refine this strategy, we can incorporate RSI signals. If the price drops and the RSI falls below 20, consider entering a long position at that level. Conversely, if the RSI exceeds 80, consider taking profits or reducing exposure. The Bollinger Bands can provide further confirmation. A buy signal emerges when the price breaks above the upper band, while a sell signal appears when the price falls below the lower band. Combining these indicators, the entry price would be $801, the stop loss at $786, and the target price at $829, aiming for a higher return based on the forecast data. This blended approach balances trend following with reactive adjustments based on momentum and volatility. Based on the historical data and forecast, Solana demonstrates a clear upward trend, with prices consistently rising from $158 to $182 over the past 2 weeks and projected to reach $188 in the coming week. The RSI consistently remained below 80, indicating that the asset is not currently overbought. However, the RSI dipped below 40, suggesting oversold conditions which could present a buying opportunity. Considering the Bollinger Bands, the price is currently approaching the upper band, indicating potential for a short-term pullback. Therefore, I recommend a long position strategy with an entry price of $180. Place a stop-loss order at $176 to mitigate potential losses if the price reverses. Set a target price of $188, aligning with the forecasted peak and resistance level. To refine this strategy, I suggest incorporating RSI signals. When the RSI drops below 30, consider entering a long position at $162. Set a stop loss at $158 and a target price of $182. Conversely, if the RSI exceeds 70, consider a short position at $182, with a stop loss at $183 and a target price of $177. This combined approach, leveraging both Bollinger Bands and RSI, should maximize returns while managing risk effectively. The final portfolio will be a long position with an entry price of $180, a stop loss of $176 and a target price of $188. Based on the historical data and forecast, Dogecoin shows a clear upward trend. The price has been bouncing off the support level of $0.224 consistently. The forecast for the next week indicates a continued rise, with prices reaching $0.255. The RSI is currently oscillating around 57.2, indicating a slightly overbought condition but not significantly enough to warrant a reversal. The Bollinger Bands are narrowing, suggesting a period of consolidation before a potential breakout. Combining these factors, I recommend a long position with an entry price of $0.234. A stop loss should be placed just below the support level at $0.224 to protect against a potential pullback. For this trade, the target price should be set at $0.255, aligning with the highest forecast price for the week. This provides a reasonable profit margin while acknowledging the inherent volatility of the cryptocurrency market. To refine this strategy, we can incorporate the RSI. If the RSI falls below 30, oversold, consider adding to the position. Conversely, if the RSI reaches 80, overbought, before reaching the target price, consider taking partial profits. The overall portfolio should allocate 5% of total capital to this trade, balancing the potential for high returns with risk management. This approach combines technical indicators, trend analysis, and risk mitigation to maximize profitability. Based on the historical data and forecast, TRON exhibits a slight upward trend. The RSI consistently hovers above 60, indicating bullish momentum, although approaching overbought territory. The Bollinger Bands show that the price is nearing the upper band, suggesting a potential pullback or consolidation. Considering the support price of $0.334 and the forecast prices trending upwards, I recommend a long position strategy. We will enter a long position at $0.342, placing a stop-loss order at $0.334 to limit potential losses. The initial target price will be $0.347, aligning with the forecast for August 14, 2025. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI drops below 60 and the price touches the lower Bollinger Band, it signals a potential buying opportunity. In this case, we would enter a long position at $0.344, set a stop loss at $0.334, and target $0.347. If the price breaks above the upper Bollinger Band and the RSI exceeds 80, it suggests an overbought condition. We would then consider taking profits at $0.349, maintaining a stop loss at $0.344. This blended approach leverages multiple indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Chainlink demonstrates a clear upward trend. The price has consistently moved above the Bollinger Band center, suggesting bullish momentum. The RSI has been fluctuating, but recently crossed above 70, indicating overbought conditions. However, the forecast suggests continued price appreciation, with prices expected to reach $24.4. Therefore, I recommend a long position strategy. We will enter a long position at $20.6. Given the recent overbought RSI and the potential for a pullback, I suggest a stop-loss order at $19.9. The initial target price will be $23.6, aiming to capitalize on the projected upward movement. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. When the RSI falls below 40, which indicates an oversold condition, we will consider adding to our position. Conversely, if the price touches the bottom of the Bollinger Bands, it could be another entry point. The final target price will be $24.4, reflecting the forecast high. This multifaceted approach combines trend following with mean reversion signals, maximizing potential returns while managing risk with strategically placed stop-loss orders. Based on the historical data and forecast, Stellar shows a clear upward trend. The price has been consolidating between the support of $0.418 and the resistance of $0.448 for the past 2 weeks. The RSI values have fluctuated between 43.3 and 60.8, indicating periods of both oversold and overbought conditions. The forecast for the next week predicts a continuous upward movement, with prices ranging from $0.46 to $0.495. Considering these factors, I recommend a long position strategy with an entry price of $0.444, a stop-loss price of $0.418, and a target price of $0.481. This strategy leverages the upward trend and the forecast, while mitigating risk with a stop-loss placed at the support level. To refine this strategy, we'll incorporate the Bollinger Bands. The price is consistently approaching the upper band, suggesting a potential for a breakout. When the RSI is below 30, consider entering a long position. When the RSI is above 70, consider exiting the position. The combined strategy will be to enter a long position at $0.444, set a stop-loss at $0.418, and aim for a target price of $0.481. This approach combines momentum, RSI, with volatility, Bollinger Bands, for a more dynamic and potentially profitable trading experience. Based on the historical data and forecast, Sui shows a generally upward trend with recent consolidation. The price has consistently bounced off the support level of $3.72 and has approached the resistance level of $4.01. The RSI has fluctuated between 42.3 and 57.0, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility, which is now expanding, indicating potential for increased price movement. Given these factors, I recommend a long position strategy focusing on breakouts above the resistance level. The entry price for this strategy should be $3.93, coinciding with the forecast price on August 15, 2025, and a break above the recent resistance. The stop-loss should be set at $3.72, just below the established support level, to protect against a potential downside reversal. The initial target price should be $4.05, aligning with the forecast price on August 17, 2025. If the price reaches this target, consider moving the stop-loss to the entry price to secure profits and potentially ride further upward momentum. This strategy combines technical indicators and forecast data to maximize potential returns while minimizing risk. Based on the historical data and forecast, Solana demonstrates a clear upward trend, with prices consistently rising from $158 to $182 over the past 2 weeks and projected to reach $188 in the coming week. The RSI consistently remained below 80, indicating that the asset is not currently overbought. However, the RSI dipped below 40, suggesting oversold conditions which could present a buying opportunity. Considering the Bollinger Bands, the price is currently approaching the upper band, indicating potential for a short-term pullback. Therefore, I recommend a long position strategy with an entry price of $180. Place a stop-loss order at $176 to mitigate potential losses if the price reverses. Set a target price of $188, aligning with the forecasted peak and resistance level. To refine this strategy, I suggest incorporating RSI signals. When the RSI drops below 30, consider entering a long position at $162. Set a stop-loss at $158 and a target price of $182. Conversely, if the RSI exceeds 70, consider a short position at $182, with a stop-loss at $183 and a target price of $177. This combined approach, leveraging both Bollinger Bands and RSI, should maximize returns while managing risk effectively. The final portfolio will be a long position with an entry price of $180, a stop-loss of $176 and a target price of $188. Based on the historical data and forecast, Jito shows a potential for upward movement. The RSI has been fluctuating between 32.0 and 53.7, indicating periods of oversold and overbought conditions. Currently, the RSI is at 53.7, approaching the overbought level of 80. The Bollinger Bands show that the price is nearing the upper band, suggesting a potential pullback. Considering these factors, I recommend a long position strategy. The entry price should be $1.84. The stop-loss should be set at $1.82, just below the support level of $1.89. The initial target price should be $1.92, aligning with the forecast price and the upper Bollinger Band. To refine the strategy, we can implement a dynamic target price based on the RSI. If the RSI reaches 80, we can consider taking partial profits at $1.97 and move the stop-loss to $1.88 to lock in gains. This approach combines the momentum from the forecast with the volatility indicated by the Bollinger Bands and RSI. The overall portfolio should allocate 60% to this long position, and the remaining 40% can be allocated to other assets to diversify risk. This strategy aims to capitalize on the anticipated upward trend while mitigating potential losses with strategically placed stop-loss orders. Based on the historical data and forecast, Virtual's protocol is showing signs of a potential upward trend. The RSI consistently remained below 50, indicating oversold conditions for a significant portion of the period. The forecast for the next week predicts a gradual increase, suggesting continued bullish momentum. We will implement a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels for optimal returns. The first strategy will be based on RSI. When the RSI falls below 30, we will enter a long position. The entry price will be $1.32. The stop-loss will be set just below the support level at $1.31. The initial target price will be $1.44, aiming for a quick profit. The second strategy will focus on the Bollinger Bands. When the price touches the bottom band, we will enter a long position. The entry price will be $1.13. The stop-loss will be set at $1.12. The target price will be $1.36. Combining these two strategies, we will prioritize the RSI strategy due to its more consistent signals. The portfolio will be 70% RSI strategy and 30% Bollinger Band strategy. This combined approach aims to capitalize on both oversold bounces and overall upward momentum, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Bitcoin shows a generally upward trend, with recent volatility. The RSI indicates that the asset has been in oversold territory, below 40, several times in the past 2 weeks, suggesting potential buying opportunities. The Bollinger Bands have been widening, indicating increased volatility and potential for price swings. Considering the forecast for the next week predicts a consistent upward movement, with prices reaching $123,000, a long-term position is warranted. Therefore, I recommend entering a long position at $118,500. Given the volatility, a stop-loss order should be placed at $116,000 to protect against unexpected downturns. The initial target price should be set at $121,000, aligning with the upper Bollinger Band and a reasonable profit margin. If the price continues to rise, a second target price of $123,000 can be considered, based on the forecast data. This strategy combines RSI signals, Bollinger Band analysis, and future price predictions to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Litecoin shows a clear upward trend. The price has consistently bounced off the support level of $108, and the forecast indicates a continued rise to $129. The RSI has been fluctuating between 52 and 70, avoiding extreme oversold or overbought conditions. The Bollinger Bands have been widening, suggesting increasing volatility and potential for price movement. Considering these factors, I propose a long position strategy. I recommend entering a long position at $124, coinciding with the start of the forecast period. A stop-loss order should be placed at $118 to protect against a potential pullback. The target price for this trade is $127, aligning with the forecast high. To optimize returns, I suggest a portfolio combining technical indicators. First, the RSI strategy will be used to identify potential entry points. When the RSI dips below 30, consider a long entry. Second, the Bollinger Band strategy will be used to confirm the trend. If the price breaks above the upper band, it suggests a strong uptrend. Finally, the support and resistance strategy will be used to set the stop-loss and target prices. Place the stop-loss just below the support level and set the target price near the resistance level. Combining these three strategies, I recommend entering a long position at $124, setting a stop-loss at $118, and targeting $127. This approach balances risk and reward, aiming for high returns while mitigating potential losses. Based on the historical data and forecast, reserve rights demonstrates a generally upward trend, although with notable volatility. The recent RSI values have been fluctuating above 40, indicating strengthening momentum, and the forecast predicts continued price increases. The price is currently near $0.00927, approaching the resistance level of $0.00989. Considering these factors, I recommend a long position strategy. The entry price should be $0.00857, coinciding with the start of the forecast period and a relatively low point within the recent trend. A stop-loss should be placed at $0.0079, just below the bottom of the Bollinger Bands, to protect against potential downside risks. The initial target price should be $0.00958, aligning with the forecast high and a reasonable profit margin. To refine this strategy, I will incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, consider entering a long position at $0.0079 with a stop-loss at $0.00725 and a target price of $0.0088. Conversely, if the RSI reaches 70 or above, suggesting an overbought scenario, consider taking profits or reducing exposure. The Bollinger Band strategy suggests that when the price touches the lower band, it is a good time to buy, and when it touches the upper band, it is a good time to sell. Combining these signals, the most efficient portfolio would involve a primary long position with a $0.00857 entry, $0.0079 stop-loss, and $0.00958 target, with adjustments based on RSI and Bollinger Band signals to maximize returns and minimize risk. Based on the historical data and forecast, Pudgy penguins exhibits an upward trend. The RSI consistently remains above 50, indicating bullish momentum, and has not reached the oversold level of 20. The Bollinger Bands show that the price has been fluctuating within the bands, but the recent price action suggests it is approaching the upper band. The forecast for the next week projects a continued upward trajectory, with prices steadily increasing. Therefore, I recommend a long position strategy. We will enter a long position at $0.0415, coinciding with the first day of the forecast. A stop-loss order will be placed at $0.0376, just below the support level, to limit potential losses. The initial target price will be $0.0458, aligning with the forecast high for the week. To refine this strategy, we will incorporate a dynamic target based on the Bollinger Bands. As the price approaches the upper band, we will consider taking partial profits while maintaining a portion of the position to capture further upside. Specifically, when the price reaches $0.0443, we will take 50% of the position off the table. If the price continues to rise and surpasses $0.0458, we will move the stop loss to the break-even point and adjust the target price to $0.047. This approach balances risk and reward, allowing us to capitalize on the prevailing upward trend while protecting against potential reversals. This portfolio is the most efficient of the three strategies. Based on the historical data and forecast, Ethena shows a strong upward trend. The RSI consistently above 60 indicates bullish momentum, and the recent surge to 75.3 suggests the asset is approaching overbought territory. The forecast predicts continued price increases, with values climbing from $0.75 to $0.911 over the next week. Considering the support price of $0.526 and the resistance price of $0.846, we will implement a strategy that focuses on capitalizing on this upward movement while mitigating potential risks. Our primary strategy will be a trend-following approach, combined with RSI and Bollinger Band signals. We will enter a long position at $0.75 on August 11, 2025. The stop loss will be set at $0.736, just below the recent swing low, to protect against a potential pullback. The initial target price will be $0.832, aligning with the forecast and the upper Bollinger Band. If the price reaches this target, we will move the stop loss to break even to secure profits and allow the position to run further. A secondary target price of $0.911 will be set based on the highest forecast price, aiming to capture the full potential of the predicted upward movement. This strategy combines trend analysis, RSI confirmation, and Bollinger Band guidance to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Lido DAO shows a clear upward trend. The price has been consistently moving higher, supported by increasing RSI values and a breakout above the Bollinger Bands. The forecast for the next week projects further gains, with prices reaching $1.58. Considering the RSI is currently at 74.4, which is nearing the overbought level of 80, we should be cautious. However, the strong upward momentum and the forecast suggest a continued bullish outlook. We will implement a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels to maximize potential returns. Our strategy will involve a long position with an entry price of $1.25. Given the recent price action and the forecast, we will set a stop loss at $1.13 to protect against a potential pullback. The initial target price will be $1.5, based on the forecast and the resistance level of $1.61. If the price reaches $1.5, we will move the stop loss to the recent swing low of $1.32 to secure profits and further reduce risk. We will then adjust the target price to $1.58, aligning with the highest forecast price. This combined approach leverages the strengths of each indicator while incorporating risk management principles for a high potential, yet controlled, investment. Based on the historical data and forecast, Raydium shows a clear upward trend, breaking through the resistance level of $3.43 on August 17, 2025. The RSI consistently moves above 50, indicating positive momentum. The Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. I recommend a long position strategy. The entry price should be $3.1 on August 11, 2025, with a stop loss set at $2.8 to mitigate potential losses. The initial target price should be $3.43, aligning with the forecast for August 17, 2025. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI falls below 40, indicating an oversold condition, we can consider a buy-in. Conversely, when the RSI exceeds 70, suggesting overbought territory, we should consider taking profits or tightening stop-loss orders. The center of the Bollinger Bands acts as dynamic support, while the lower band signals potential buying opportunities. A refined strategy would be to enter at $3.1 on August 11, 2025, with a stop-loss at $2.8. The first target price is $3.43, and if the price reaches this level, we can move the stop-loss to the entry price of $3.1 to secure profits.